Hello, good morning, everyone. Okay, so before we start our daily briefing today, so let us take a review on our market graph regarding the NFP report data on last Friday. Okay, so the NFP data, the release of the NFP employment data brought big volatility to the market, especially forex major pairs and also the gold. Okay, so let us see here. Okay, so the GBP USD, the volatility is around at 110 pips. For the other is around 80 pips. So as we can see here, there's the due to the volatility is because of the NFP report employment data. That's why we can see the big volatility on all the forex major pair. So let us start our daily briefing today. Okay. So when come to we will take a review on our previous important economic data, which is last Friday. The first one is the Canada balance of trade May. The previous is 0.46 billion. The forecast is 0.37 billion, but the actual is negative 1.39 billion, which is slightly lower than the forecast. So the lower than the expected reading should be taken as negative or bearish for the Canadian dollar. So the second is US balance of trade May. So the previous is negative 69.1 billion. The forecast is negative 7.4, so 71.4 billion. The actual is negative 71.2 billion, which is slightly higher than the forecast. The we should take it as we should higher than the expected reading should be taken as positive bullish for the US dollar. So when it comes to the third one, the third one is US non-farm payrolls June. The previous is 583K. The forecast is 700K. The actual is 850K. So the data release is at last Friday at 8:30 at night. So a higher than the expected reading should be taken as positive or bullish for the US dollar. So when come to the last one, the previous important economic data is the US employment rate June. So the previous is 5.8%, the forecast is 5.7%, the actual is 5.9%. Okay, so a higher than expected reading should be taken as negative bearish for the US dollar. Okay, so when come to the previous, so when come to this one, the previous day market volatility review. So for the gold volatility ranging within 190 pips, as we can see here on the right side, the macro graph here, the red rectangle within the red rectangle here. This is because of the release of US NFP employment report. So let us read the factor here. The spot gold rose more than 10 US dollars last Friday to close at 1787.3 US dollars per ounce. It once touched 1795.17 during the section, so the highest level since June 18. Okay, so because of the US dollar fell after the release of the US NFP employment report. Okay, so this is the factor, as we can see here, the range, the gold prices ranging at this price. Okay, so when come to the important economic data today, which important economic data we have to focus on for the Asia section, the 9:30 a.m. Australia retail sales monthly final May. So the previous is 0.1%, the forecast is 0.1%, the actual is 0.4%, which is slightly higher than the forecast and the previous. So we should take it as positive or bullish for the Aussie dollar. Okay, so when come to the EU section, we have two important economic data. We have to take note. We have to take focus. So these important economic data are from UK. So both are related to the Great Britain pound. So the first one, UK market CIPS composite PMI final June. So the previous is 62.9. The forecast is 61.7. The data release time is at 4:30 in the afternoon today. So a higher than the expected reading should be taken as positive bullish for the GBP. So while a lower than expected reading should be taken as negative or bearish for the GBP. So the second is the second is UK market CIPS, UK services PMI final June. So the previous is 62.9, the forecast is 61.7. So the data is still the same, 4:30 in the afternoon today. So a higher than the expected reading should be taken as positive bullish for the GBP. So while a lower than expected reading should be taken as negative or bearish for the GBP. So when it comes to the market update, I will keep you update on our gold price here. So the resistance level for today is 1795. For the support level today is 1775. So actually, my personal opinion for gold price today will still continue to sideways within these prices. Okay, so let's read the factor here. So last week, the number of NFP employment hit a record high in more than 10 months. So, but the employment rate has risen, which has provided support to the gold boost. So, in addition, the spread of the Delta virus and the continued decline in US bond yields have also provided momentum to the gold boost. So, however, because Fed officials are inconsistent on the Fed's next monetary policy, the gold market is in sideways volatility. So, as the United States is celebrating Independence Day, so this week will be a week with less important economic data. So at the FOMC minutes need to be, but still the FOMC minutes need to be focused on the attitude of the Fed officials to the first reduction in QE, which is quantitative easing, which is very important to the market. So investors are actively tracking any signals from Fed officials about reducing bond purchases to determine how liquid the market is. So although the gold still recorded 3 consecutive gains in the situation of the strengthening of the US dollar last week. So the overall trend of gold is still weak, and the bulls have not yet come out of the sideways pattern, as we can see here. This is still the sideways pattern, not the bull trend or a bear trend, is still the sideways. Okay, so this week we will focus on the data such as the FOMC minutes on Wednesday, the initial jobless claim on Thursday, and also the ISM non-manufacturing PMI for this week. So actually for the price here, as we can, let's just see the right side, the market graph on our right side here. So if the price didn't break out the R1, the resistance one here, 1795, so the price of gold more likely will continue sideways. So if the gold prices went up here, break out the resistance level 1795, then the gold will more likely will go up to 1800. So that's all for our morning. That's all for our daily briefing today. So thank you for joining, and hope you and wish you have a good day. So bye bye.